It's a nice idea to look back on the previous year and forward to the upcoming one as we begin the new one. The next year may be revolutionary for Tesla investors. There are a number of indications that for investors in the electric vehicle firm, this could be a historic moment. For Tesla investors, this is an incredibly exciting time due to a number of amazing variables coming together. Are you prepared to defy expectations and work with me to eradicate force in the Tesla investment space? Despite market turbulence, Cathie Wood, the CEO of ARK Investment Management LLC, is more bullish than ever about the electric car giant thanks to her unmatched expertise and track record. Over the next 5 years, Cathie believes that the price of Tesla stock will increase by a factor of 5. Come along as we explore this bold investor's thinking to see the motivations behind her resolute faith in Tesla, from her most recent buying binge to her ambitious forecasts. Anyone interested in the future of the electric vehicle business should watch this video. Please hit the like and subscribe buttons before we go there. Did you know that, even though it's only the 1st of February, Cathie Wood is more optimistic than ever about the top electric vehicle company, Tesla? Many individuals have lost faith in the firm and its CEO, Elon Musk, and have sold their Tesla stock as a result of the company's recent turbulent performance. Based on ARK's daily statistics, Cathie Wood predicts that the stock of Tesla will climb by a factor of 5 over the next 5 years, and she is more confident than ever about the company's future. During the first U.S. trading session of 2023, Cathie Wood, the CEO of ARK Investment Management LLC, purchased roughly 176,000 shares of Tesla. This represents a reaffirmed belief in the EV manufacturer at a time when many other investors have abandoned the business even in the face of generous incentives. Tesla's stock price has dropped 12 points since October 3, when their most recent buying binge started, as a result of the company missing quarterly delivery projections. Based on ARK trading data compiled by Bloomberg, Wood's ETFs have acquired little over 938,000 shares of the electric vehicle company. ARK purchased Tesla stock during the first of 7 quarters from October to December, as many people are aware that 2022 was a challenging year for the company. One could argue that Tesla was discounting cars in the previous month to set refreshed tax credits that would be rolling out in 2023, but it was later discovered that the tax breaks won't apply to many of the automaker's offerings. Nevertheless, the company aggressively discounted its products in the United States last month, offering a discount of $3,750 to consumers. The seemingly radical move from the market leader in EVs didn't pay off. In spite of this, after a third consecutive quarter of deliveries, Tesla nonetheless let investors down by reporting lower than expected fourth quarter deliveries. After the miss caused the average Wall Street projection to drop to its lowest point since October 2021, several analysts lowered their 12-month price estimates for the stock. Even if the market has increased by 4% since Elon Musk took over as Twitter CEO on October 27, the average target price still indicates that the stock will rise by much over 100% in the next 12 months. Since then, Tesla's stock has drastically decreased. Retracing the stock chart to its peak in late 2021 reveals an almost 70% decline in Tesla shares. The fourth quarter's lower than expected sales disappointed investors, but on the plus side, Tesla is still rapidly growing its market share despite automakers' difficult 2022. That year, there was a 40% rise in Tesla vehicle deliveries. Over the past few months, Wood has increased her stake in Tesla, and she hasn't stopped even when the stock has turned south. The CEO of ARK Investments, which manages the publicly traded Energy Select Sector Fund that tracks the stocks of energy companies, said lately that the market was acting irrationally. However, Tesla will continue to increase its market share. Recently, the company has aggressively lowered its prices, which has hurt its competitors by forcing other manufacturers to follow suit. Over the next 5 years, the world's oil demand is predicted to decline by 30% or more. ARK Investment CEO Cathie Wood said, "We are as bullish as we have ever been about Tesla." As a result, ARK is still optimistic about Tesla and believes the firm will appreciate tenfold. This optimism stems from the assertion made by Wood that Tesla can double its addressable market by reducing the cost of an electric car. In the book In Harm's Way, Woody highlighted the Tesla autonomous taxi platform as an example of the kind of groundbreaking shift that was required. According to Wood, no other automaker will be able to match or outperform Tesla's combination unless they wish to lose money on their vehicles. Regarding the large companies that compete with Tesla in the development of electric vehicles, she would emphasize that it is critical from both a performance and range standpoint. Brand loyalty will decline when consumers begin to switch from gas to electric vehicles and consider the features of several models. Wood thinks they are doing miserably in this regard. Our CEO, Cathie Wood, expressed her opinion that gas-powered cars will become obsolete in the next 5 to 10 years in an injury on Yahoo Finance last year. She also stated that the traditional auto industry, which is currently the largest automaker in the world, needs to find a way to transition to electric vehicles. In this particular economic sector, Tesla has become the leader. Even if financial returns may not be as high as they have been in the past, Tesla is positioning itself to lead the electric vehicle sector into a new era. Another ARK executive gave a positive assessment of the top producer of electric vehicles during a mid-October visit on CNN's Squawk Box. He claimed that the company has a lot of iron in the fire and that investors should think carefully before making a purchase. ARK is bullish on Tesla, as Tasha Keeney elucidated. Although electric vehicles make up a relatively small portion of car sales at this point, according to Keeney, the industry is still in its infancy. Nevertheless, Tesla is widely recognized as a leader in the EV and autonomous markets. In a different interview with Yahoo Finance, Wood added that she thinks Tesla will switch to an autonomous taxi platform by 2024. To achieve its aim of increasing delivery by 50 per year over a number of years, Elon is still very much focused on ensuring that Tesla remains the top seller of electric vehicles worldwide, despite the fact that Tesla has slashed prices on all of its products in China and announced a planned shutdown of its Shanghai facility. Tesla warned that it will fall short of its 2022 targets and that it will probably have to make concessions when it comes to gross margins. Bullish analysts and investors are optimistic that the business will continue to lead the electric vehicle revolution, which has finally gathered steam. This includes advances in solar energy and battery storage sectors, though some experts predict that delivery will increase by 40% in 2023 to 1.8 million to 1.9 million vehicles from roughly 1.3 million in 2022. Investors and pessimistic experts fear that the company will fall short of its potential and merely become another product outfit rather than pioneering anything truly groundbreaking. These experts view Tesla as an expensive, vulnerable to competition, highly subsidized company, and they believe that investors will be persuaded that Tesla's 2023 earnings prediction is reasonable and that the stock price may have fallen too far if 2023 delivery estimates are fulfilled. Let me recap why these so-called experts are incorrect. The company has made significant progress in increasing its production capacity, developing new technologies, and growing its market share in the electric vehicle space. Additionally, Tesla's recent entry into the energy storage market is expected to be a significant growth driver for the company, with growing demand for renewable energy solutions in a push towards electrification. The energy storage market is predicted to be a multi-billion-dollar industry in the near future. Finally, the company's ongoing efforts to reduce the cost of battery technology could lead to even more disruptive innovations. First, Tesla has experienced tremendous growth over the past few years, and this trend is expected to continue in the upcoming year. For Tesla investors generally, all of these elements come together to make this an incredibly exciting moment. When it comes to Tesla shares, Cathie Wood and her investment company, ARK Investment, are more optimistic than ever. Being a fervent supporter of innovation, she has spent the whole year publicly endorsing Tesla and its forthcoming cutting-edge initiatives. We want to shed light on investing and finance with this film. Recall that the success of the financial market hinges on thoroughly analyzed elections. Prior to making any investments, always get financial advice. However, please hit the like and subscribe buttons if you like the video. I'll see you in the next one.